A bank reconciliation is something that should be done every month, and this will help prevent various fraudulent transactions from being occurred. And um, it helps if you have good internal control so that you don't have the people writing the checks doing the bank reconciliation. But bank reconciliation, banks do make mistakes. I've had them double take money from a check before. I once when I was a college student and I was banking at the same bank my parents banked at. They wrote me a check for my college fees. I deposited in my account, and the bank took it out of their account and deposited it back in their account. And so I ended up bouncing about 3 checks, which they took care of, but it was still a pain in the rear. So anyway, bank reconciliation is something that should be done. So on exercise 7-34, we have the Harrison Company maintains a checking account at First City National Bank. The bank provides a statement along with canceled checks on the last day of each month. On July 2021, the bank statement included the following information, and they show us a balance July 1st, the number of deposits, 179,500, checks processed, 192,610, service charges of 30, NSF, that stands for not sufficient funds. In other words, people bounce checks to us of $1,200, and monthly payment on note deducted directly from the bank on account includes $320 of interest, and that's for $3,320, leaving us with a balance of $38,018. Okay, the company's general ledger account had a balance of $38,918. So there's a difference of $900 between what we have and what they have. So the way you reconcile a checking account is you put down the balance per bank here, and this is the ending balance, 38,018. And then you put the balance per books. And that's what we were told was 38,918. All right, so the trick here is you're going to know some things that the bank doesn't know yet. So and by the time you get the statement, you've made some other things and your books say one thing. And the bank is going to know some things that you don't know yet. So what you've got to do is you've got to reconcile those two. And so you add and subtract from the balance per bank what you know that the bank doesn't know, and you add and subtract from the balance per book what the bank knows but you don't know. Okay, so as we go along here in the narrative, it says the company's general ledger account had a balance of $38,918. Deposits outstanding include $6,300. Now, a deposit outstanding is a deposit we've made, but the bank has not given us credit for yet. So we're going to put deposits outstanding. Sometimes that's called deposits in transit. And that's going to be $6,300. All checks written by the company were processed by the bank, except those totaling $8,420. So those are known as outstanding checks. And we're going to subtract that because we know that we've written them, but the bank doesn't know it yet. 8,420. We do that. In addition, a $2,000 July deposit from a credit customer was recorded as $200 debit to cash and credit to accounts receivable. And okay, so we have a $2,000 deposit from a credit customer was recorded. When they say recorded, that means recorded in our books. So there's $180. So the bank or $1,800. The bank knows that we've got. So this is a deposit mistake. The bank knows we've got $1,800 more than we know we have. Deposit error. $1,800 on that. So that's going to go up. And a check correctly recorded by the company as a $30 disbursement was incorrectly processed by the bank as a $300 disbursement. So we've got to go take care of that with the bank. So in the bank's books, we should have an extra 270. That's a check error. And that's the difference. And then it says prepare the bank reconciliation for July. So we add those up. So for the book, we have 38,018. Oh, I forgot. We also have some things up there: deposits, the checks processed, refund, service charges. Now the bank knows that we had service charges, but we didn't. So we've got to put service charge. Of 30. We need to take that out. NSF checks. We didn't know that those bounced yet. And so we need to take out $1,200. Get a little bit early on my line there. And then we have the monthly payment on note deducted directly from the bank includes a $320 interest. So that's a note payment for $3,320. Now we can add all those things up. So we start with 38,108. We add to that 6,300. We subtract from that 8,420, and then we add the 270, and we get 36,168. All right, now we do the books, and we start with the 38,918. And we're going to add to that the $1,800 we incorrectly recorded it as. Then the service charge of 30, and the NSF checks of 1,200, and the note payment of 3320, and that's going to give us 36,168, and those balance. And so our checking account is balanced, and we now know that the correct amount in our checking account is 36,168. Now the other thing they ask us to do on this is to put in the entries that we're going to have on that, the adjusting entries, in order to make our books come up correct. And so the first thing that we do is we have this $1,800 deposit error. So we're going to add cash for $1,800, and we're going to have accounts receivable, because remember we recorded it incorrectly in both cash and accounts receivable. Okay. So that takes care of that error. To record the credits and cash received by the bank. Okay. We're going to have bank expense for the service charge. And that's going to be for 30. We're going to have accounts receivable. And that's for the NSF checks, $1,200. Now, just because they bounce a check to us we don't just call it good, say forget about it, go on with our business. We're still going to try to collect that, and if we don't collect it, we may end up turning it over to the sheriff, whatever might be. We then have the interest expense on the note. Remember, we had the note payable was $3,320, but 320 of that was interest expense. And then we had the notes payable for $3,000. And it really doesn't matter what order that you do these in, but these are all things that got taken out. And so we're going to take that out of our cash, and that adds up to $45.50. All right, so that's our bank reconciliation, and that is our adjusting entries on that. Okay, so that's bank reconciliation.